Good morning, ladies and gentlemen. This is Butch Shark. It's Options University. It's Monday, the Monday after Thanksgiving, November 26, 2012. Access to this video is for educational and informational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotional recommendation, solicitation, or offer of any particular investment, security, or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options, and we're not a service that tells you what to trade. We're not implying or guaranteeing any profit, and as always, do not trade with money that you cannot afford to lose. Looking at the last week, it was a very shortened week that we had Thanksgiving come in, and we had a shortened day on Friday. So let's take a look at the next week and see this week and see what it is that we're expecting out of the market. On Monday, we have the Dallas Fed Manufacturing Survey, which certainly can move the market. Look at on Tuesday, Bernanke speaking at 8:30. We know that he can move the market. Durable goods coming out at 8:30 also on Tuesday. Case Shiller coming out on Tuesday. Consumer confidence coming out on Tuesday. So we certainly have information coming out on Tuesday that the market can definitely react to. New home sales coming out on Wednesday. And as we look at the rest of the week, more important information is GDP, jobless claims, which come out every week, and pending home sales coming out at 10 o'clock. And finally, on Friday, November 30th, where did November go? Personal income and outlays coming out at 8:30, and Chicago PMI coming out at, as we approach that 10 o'clock hour, at 9:45. So with that thought, there is definitely news that can move the market in this coming week as we approach that all-important fiscal cliff. Let's take a look at last week and see exactly what we got out of the S&P. Looking at a 3-month chart, we see that the S&P continued in its downtrend, as we still are in that overall downtrend, but we bounced last week and are in an upcycle in that downtrend and have come up and hit that 30-day moving average. Technically, we were long due for a bounce. We got that bounce. Now the real question is, which way are we going to bounce after this? We notice the 30-day moving average is below the 50-day moving average, and therefore we're spending time below that moving average. Technically, we're a bit overbought, and we had big moves as the week went on. 50-day moving average sitting right up here at about 1425. Next resistance sitting right at about 1417, 1418, right in that area. So we'll see this week where we go with all those announcements that we saw earlier that will be coming out in this next week. All right, plenty of news to move the market in the next week. All right, looking at the week that just took place, Monday we had a nice little move in the market. The move took place because there was discussion of some kind of compromise taking place for the fiscal cliff, and of course that fiscal cliff is all important to us. So big day up on Monday. Tuesday, we ended up with what looked like a potential reversal signal with that almost a hammer. And so as we look at that, we didn't get confirmation on Wednesday. And so what happened to us on Tuesday? Bernanke came out and said that the Fed probably could do little or nothing to stop a recession if we actually did not solve the problem with the fiscal cliff. Wednesday, the market had some choppy trading, didn't really move very far, kind of a real narrow range day as everybody was getting ready to go to Turkey Day. And then look at Friday, trade shortened day, as it wasn't open all day, but look at that run as it ran right up to that 30-day moving average and hitting on resistance. Now the question is, which way is it going to go? Is it going to pull back? So what we want to do is we want to watch the market very carefully during that first hour and try to get some kind of feel is if we're going higher, headed for that 50-day moving average, or if we're going to pull back after that nice move this week of that long overdue technical bounce. All right, let's take a look and see what the Dow did. Looking at that, we see the Dow looks very similar to the S&P, definitely in a downtrend. Notice that the 30-day moving average is much closer to the 200-day moving average. And on the Dow, we see that the market really rallied up to that 200-day moving average. So we're ending up with some coalescence here, and we'll see whether the Dow helps lead the market back down and retest this previous low at this point right here. All right, looking at the NASDAQ. Let's take a look at the NASDAQ, and we see well below the 200-day moving average, well below it. Did get our technical bounce, went up, hit the 30-day moving average, sitting at resistance in the same position that the S&P and the Dow are in. Now, the real question is watch for lower lows and lower highs on Monday, or higher lows and higher highs on Monday. Give us an idea whether the market wants to continue on its way up and give us some kind of year-end rally, or whether it's time for a little bit of a technical bounce to the downside. All right, Russell 2000, of course, well below that 200-day moving average also, and we see that it also is sitting right at that 200-day moving average. So if we truly are in a downtrend, we could expect some kind of move down. Watch for lower lows, lower highs, or higher lows, higher highs to give you an indication of some kind of direction for this week. The VIX, and we see as we look at the VIX trading in our normal zone between 14 and 18, not much fear in the market, and if you notice that for your option investors, not much premium either. And so we see that we're sitting at the very low of our range as the market has bounced up. Now let's take a look at the bond market. Looking at the bond market, we see that the bonds did exactly what one would expect it to do. Went up, reached that previous high as the market went lower, and as the market started heading higher, the bonds, of course, pulled back well above the 200-day moving average, well above the 50-day moving average, well above the 30-day moving average, as we see the bond market looking pretty healthy and having quite a run in the last couple of years. Next, looking at the financials, we see the financials did coalesce with the overall market. We got a crossover with the 30 and the 50, and it bounced nicely with the overall market, and the financials, of course, are very well received at this particular point, as QE3 definitely helps the financial market in general. Now, taking a look at oil, we see that oil is doing absolutely nothing. A nice sideways trading range. For those of you that don't want to trade this ETF, the USO, you can trade it with the idea that it is really going just about nowhere. Our safe haven gold, kind of interesting, gold popped up as the market popped up, and so we see that we saw an increase in gold as we had that big move up Friday. Seems to be following the overall market at this particular point. All right, and as we look at the volume for the last week, there we are, Monday, Tuesday, Wednesday, and Friday. Look at as the week went on, what happened to the volume. So we do not have confirmation on this rally. As the volume went down, the market went up, and no confirmation on the rally whatsoever. So watch for lower highs and lower lows this week, as we may be back due for a technical bounce to the downside. With that thought, we're going to look at our, for those of you that are gold members, we'll look at our stocks to watch, see how they fared in this week that was in the market, a much trade shortened week as Thanksgiving took place, and we hope that you all were able to sit down with your family and remember what you have to be thankful for. With that thought in mind, from Options University, this is Butch Shorak. It's Monday, November 26, 2012, and thank you for being here.